Welcome back to Stocklabs for another market recap. We are sort of at the midpoint of May, and it was a bit of a soft-ish week for the market, although maybe you couldn't tell by the headline indices. We started off the week pretty okay, and then sort of everything started selling except for FAANG, and that was keeping the Qs up. It was keeping the S&P up for a little while, and then on Friday we kind of had a more or less across the board down day. So everything in the um, index wise closed lower. The Qs still held 77 bips to the upside for the week. S&P was down 1%, IWM was down 1.4, and the Dow was down 2.3, with crude getting hammered down 8%. So it seems like the fears in the market now are shifting from rates back to sort of recession and growth type jitters, as they call it. You're seeing crude really struggle. I mean, every time there's an up week, it just gets hammered the following week back down to, back down toward recent lows or whatever, wherever it is. But Qs were taking a lot of money most of the week. You had, it was more or less just the FANGs. I mean, tech overall was not doing anything that impressive itself. For the FANG stocks specifically, we've got Google was the leader, up 9.5% for the week, just on, just because. And then Amazon up 4.6, Netflix up 3, Tesla up 2, Nvidia up 2, Microsoft up 56 basis points, Meta down 2.7, kind of the laggard, and Apple down 59 basis points, underperformed the NASDAQ but beat the S&P. So you can see like these mega terra cap stocks, they're all, they all held normal green weeks when indices were red. A lot of the rest of the market was soft. So if we take a look at breadth on an industry basis here, soft across the board. Utilities outperformed, up 8 or 76 basis points. Healthcare was up 8 tenths, 9 tenths, and the rest were all red. So basic materials struggled, down 3.7%. Services struggled, down 2.3%. Tech down 1.25%. So this is another one of those weeks where the median tech stock drastically underperformed the Qs. You remember from like a couple weeks ago, we also had a similar sort of regime. Consumer down almost 2%. Financials down 1.75%. Financials are just having all sorts of problems. I mean, I think the story is well documented at this point. Doesn't seem like there's any traction being established in that sector. On subsector basis, okay, we've got some drugs and foreign utes up 7-ish%. We've got security services up 666 basis points. Solar, a rare bounce, up 5.7. It's pretty good. Some services and semiconductors up 5.5%, and another drug sector. So we had a couple of, a handful of sectors up 5%, but not really that many. And on the downside, we had a lot of stuff. So you see all the regional banks getting smoked again. Savings and loans, another financial type sector getting hit. Copper, silver, and you're seeing a lot of economically sensitive stuff. Regional airlines. Even the big banks are starting to get hit now more regularly, not just the regionals. And cannabis, obviously a permanent fixture on the worst performers list. And over here we've got, okay, this is 25. So we got 29 sectors down over 5%. So breadth was skewed to the sell side for the most part. If we look at breadth by market cap, and let's go to 5 billion. Mullen was a split. Okay, down 74 basis points for 1 to 5 billion. 5 to 10 billion, down 1.4%. It's pretty bad. 10 to 50 billion, down 1.2%. It's a little bit better, but 50 to 100 billion, down 1%. So anything, what did you see? 100 billion plus, down 1.7%. So this is actually pretty concerning. I mean, everything. I mean, we talked. You saw the pumps in the FAANG stocks, but really that was it. There was nothing else in the sort of universe. I mean, not nothing else, but the average return for a stock over 100 billion plus was down 2% for the week, when FAANG was up probably 2% for the week or 3% for the week. So there was a big deviation opening up between just the handful of FAANG stocks and more or less the rest of the market. All the other market caps were red, and the 100 billion plus mega caps, terra caps were also the reddest out of the group of cap slices. So decidedly sell type action this week, even though the NASDAQ closed up 0.8 by Friday. So let's see what intelligence has to say for this week. It's pretty sparse on here. Okay, SOX S is on here as bullish, and a bunch of other random stuff. Okay, TMF, bullish treasuries is bullish, and China is bullish. Another China is bullish, and Europe is bullish. So some overseas markets, EM markets, rated bullish. Semiconductors rated bearish. And let's flip this around to see the downside expectations. Okay, DRIP is bearish. Should be bullish for the oil and gas explorers or whatever. Retail is bearish. Bearish financials is bearish, so bullish financials. The dry bulk index is bearish. And I don't know what, this is Microsoft is bearish. This is some levered Microsoft ETF or ETN. So Microsoft bearish, and Israel bearish. For me, just based off of all this, I would expect, this is sort of, we've had the last maybe three weeks, maybe 4 weeks of I would say call it like divergent breadth to the downside, where the S&P and the Qs have held up pretty well. IWM has not. The Dow has done whatever. Nobody really follows the Dow. So I would expect sort of the S&P and the Qs to start to catch down to the rest of the market. Whatever, maybe there needs to be a catalyst, maybe not. It can just, we can just continue from Friday's trend down. I think if IWM makes If it starts getting down towards year-to-date lows, people are going to get spooked in the rest of the indices, and you'll start to see some heavier liquidations. So we'll see what happens. I would be pretty cautious this week. It is option expiration week, so there's generally on option expiration week, you can sort of fade the early week move. If market pumps like Monday, Tuesday, you can sort of fade it into the expiration. If it drops, a decent amount Monday, Tuesday, you can more or less buy the dip and expect a drift higher into the expiration is kind of what I would expect from the action. For me, though, I would plan for just general downside this week. Maybe it'll be choppy and slightly to the downside or something like that. But the market is not going to crash or anything like that. But I think you're better off playing cautious and looking for better opportunities than what you have right now. So it is sell in May. After all, you could just be seeing, that idiom playing out. So yeah, that's all from me. Hope you guys have a good week, and happy Mother's Day to all the mothers out there. And we'll talk to you next week. Bye.